At Numerian Capital, we bring you the latest stock news each day. Please like and subscribe so we can bring these articles to you each day. Thank you. Today, November 3, 2023, why is NIO stock up today? NIO stock is rising on layoff plans. NIO stock is getting a boost on layoff news. The electric vehicle company is cutting 10% of its workforce. This news comes as NIO seeks to better compete against rivals in the EV space. NIO, NIO, stock is rising higher on Friday after the electric vehicle company announced plans to lay off a significant chunk of its employees. According to an internal letter sent to employees, NIO is going to be reducing its headcount by around 10%. The company is enacting these job cuts as a way to deal with fierce competition in the EV space. It expects to complete a reorganization plan, which includes these layoffs, this month. William Lee, CEO of NIO, said the following about the layoffs in the internal letter obtained by TechCrunch. "I'm sorry to colleagues who may be impacted by the adjustments. This is a tough but necessary decision against the fierce competition. Our journey is a marathon on a muddy track. Please stay focused on efficient execution and improvement of system capabilities. Power up." NIO stockholder reactions on Friday. With this layoff announcement, shares of NIO stock are seeing extra attention from investors. That brings with it decent trading of the EV company's shares. As of this writing, around 25 million shares have traded, as compared to its daily average of roughly 46.9 million shares. NIO stock is up 4.8% as of Friday morning but is still down 15.3% year to date. NIO flirts with spinning off businesses amidst sharp competition. Here's what's driving this EV stock higher today. Shares of NIO stock gained 5% in early afternoon trading today. This move followed an announcement that NIO would consider spinning off businesses in a bid to cut costs and combat competition. The company had already said it's willing to cut 10% of its staff, clearly refocusing on efficiency. In today's market, NIO is among the electric vehicle stocks in focus for many investors. That's partly due to the company's price action, with NIO stock rising more than 5% in early afternoon trading today. This move comes at an intriguing time for NIO and the industry more broadly. In an internal letter signed by the company's founder and CEO, NIO outlined a two-part plan Wall Street seems to like. The first part of the plan, which we touched on earlier this morning, involves deep cost cuts, which will ultimately culminate in NIO cutting around 10% of its workforce. These layoffs, like those announced by so many of NIO's peers, have been received positively by investors who look for a faster track to profitability for the EV maker. Indeed, the fact that the car manufacturer loses roughly $35,000 per vehicle is something many investors will want to see remedied. In addition to these job cuts, NIO also announced that it may spin off non-core businesses to reduce costs and improve efficiency. This intense refocusing is something the investor community clearly likes today, given the surge higher in NIO stock since the announced strategic moves. NIO stock surges on pivot to efficiency. NIO's aggressive stance on its capital spending plans and its existing cost structure is something investors are beginning to become accustomed to. A focus on becoming profitable yesterday is something that's good for investors, as a significant amount of capital was clearly misallocated during the zero interest rate environment we saw for the better part of the past decade. With a true hurdle rate on investment, companies can simply buy short-dated bonds with their cash and earn nearly 6%. Investments need to have a positive ROI in a short time frame. NIO has put a 3-year target on profitability for any project investments. That's certainly a step in the right direction and among the more aggressive targets I've seen placed on capital spending. I think NIO's management team is certainly making the right moves to create value for shareholders and a brighter future for all. Yes, 10% of the company's workforce will be let go. However, having a company with a much more robust financial footing ensures a future for the company's most productive workers, and buyers of NIO vehicles can be assured the company won't disappear like a flash in the pan. Thanks for watching.